Arcadia Economics, and appreciate you joining us on a Friday. And certainly, I think we have some good news to discuss today because joined by my dear friends, Fortuna Mining, CEO Jorge Ganoza, and of course, Dave Kranzler, because Fortuna had some great drill results out at the Kingfisher prospect, also Sunbird and Diamba Sud. So a lot to dig through, and great to have you both here with me today. So Jorge, welcome on in. Great to see you again as always, and congratulations on the news this week.
Thank you, Chris and Dave. Great to be in the program again.
Always good to be here, guys, especially when there's good news.
Yeah, well, I think there's a lot of good news, and we are going to dig right into the drill results in a moment. Although I have to ask you, Jorge, perhaps at the beginning of the year or when you were making the plans for any of the information that is now getting released, I'm wondering if you ever woke up one night and imagined that you'd be doing it with a $2,600 gold futures price here as the news comes out. And just any thoughts on that and before we dig into the results?
No, absolutely. I was in an interview a few days ago, and the reporter asked me what's my outlook on prices, and I replied to him, you know, it's ill advised to ask a mining CEO about gold prices, but you know, we work for this, right? We work for these moments. You know, I take the view that we have to perform throughout the precious metals price cycle. And, you know, I don't know how high or crazy gold price will get. I've been, I'm on an observer of the precious metals prices for, you know, almost 40 years now. And I think this has legs to go bigger, but I don't run the business thinking of the higher prices. You know, we have to perform at any price, right? We have to focus on what we control, but we certainly work for these moments, no? And in Fortuna, you guys know very well, we have made some acquisitions, developed mines, build our portfolio before all of this. Basically, when it was a bit unpopular to be deploying capital, that's when we were growing the business. And now we are in a position to harvest and to see the benefits with expanding margins. Our margins today, on a consolidated basis, are getting to, you know, over $1,000 per ounce. And our lowest cost mine, which is our newest mine, we were enjoying margins of what, almost $1,500 per ounce, right? So that's a mine you know well, Dave. You have been there, and you know, it's just a good time, and I think there is a big opportunity that we'll see even better. There we have challenges as an industry. We have to be cognizant of, and we can talk about that. But yeah, it's a great. We work for in the industry, in Fortuna in particular. We work for moments like this, no?
Yeah, and I sure hope that it feels good, because you're obviously, for anyone who maybe is newer to Fortuna, you're not just saying that of the cycles in the market, but we've just had a down cycle for the past couple of years before the rally began this year, and people can go back and look and see how you were putting things in position. So that, fortunately, it's nice to have the higher price now while some of these things are coming out. And with that said, let us dig in and start first with Kingfisher. I'm going to pull up our press release here, where it mentions intersecting 14.2 grams per ton gold over 16.8 meters. And as Paul Whedon, the Senior VP of Exploration, mentions, that it's rapidly shaping up as a substantial prospect at Séguéla, defined strike now over 2 kilometers in length and remains open at depth. So I'll leave the results up here, and anything that you can share about the results that you've had at Kingfisher.
There are two most exciting aspects of this discovery at the Séguéla mine, no? That speak about the potential of the property. The first one is that it's right under our noses. What do I mean by that? It's only 3.5 kilometers away from our processing plant, right? And the second one is that it's a blind discovery. What do I mean by that? It's geochemically muted on surface. It does not outcrop. And it was discovered through smart exploration. And you know, we are covering the area with systematic auger sampling. As an outcome of that, we identified, our team in the ground, a single point soil anomaly, a very weak one. And the team had the experience and good judgment to go right there and just put a hole under that, no? And sure enough, 14,000 meters of drilling later, we have defined mineralization or a strike length of 2 kilometers and remains very much open at depth. We're quite excited about it because it speaks about the potential of the property, the greater potential of the property. This is a blind discovery 4 kilometers away from the processing plant. You know, we just remain very excited about the things we can discover here as our work progresses. And I believe we have years of work ahead of us. As you guys know, we have a very large land package. We control from north to south a strike length of 35 kilometers on the belt with the right rocks, the right structures. So no, this is very exciting. We don't have a resource estimation at Kingfisher yet. We plan to continue drilling pretty much all the way until the end of the year, and at that time produce our first resource estimate for Kingfisher.
Okay, that was actually what I was going to ask next, if there was a rough timeline for that. So appreciate you commenting on that. And one other thing I wanted to ask here, the merging of the previous 3 separate lodes into a single zone of continuous mineralization, if you could talk a little bit more about that and perhaps any way that affects what you're doing operationally.
Well, you know, our work is filling the gaps that we have. As I said, the first round of drilling was 14,000 meters of drilling. And when looking at that, we defined, you know, different portions of the ore body. And we have expanded the drilling. We're going to be drilling an additional 7,000 meters here. And things are coming together, no? The deposit is coherent, consistent, and you know, as I said, we are excited. Still early days for this discovery, right? This thing didn't exist 6, 7, 8 months ago, and yeah, we just need a bit more time and let the drill bit run and come up with our first maiden resource, right?
Okay, and again, appreciate you mentioning that drilling is ongoing. Dave, would you like any questions on Kingfisher specifically for right now?
Yeah, just a couple. You said you're going to do, excuse me, 7,000 meter, another 7,000 meters. Is that this year?
Yes, we have expanded the drill program so we can continue drilling until year end with the aim of giving ourselves the best chance to add as many ounces possible to this maiden resource estimate that will be coming towards the end of the year.
So is that going to be a combination of infill and exploration drilling, or
Our aim is to deliver an inferred resource.
okay.
So we are managing the drill spacing in a way that allows us to have a good inferred resource. And so in this first pass, discovery pass, I would say, the aim is to define the extents of the ore body and come up with the first of the mineral deposit and come up with the first inferred resource. Once we have that, we can start working on closing the grid for indicated, and while we continue expanding, right? So we'll have two programs in place. Right now, the program is, designed to discover, explore the limits of this mineral deposit.
So, I mean, have you done any met testing yet?
No, we are sending samples to the lab. The deposit to the naked eye looks quite similar to what we have, no? Remember that the Séguéla reserve is made up of 6 mineral deposits, all of which are clustered, within 6-7 kilometers. And this is right in the middle of it. By the looks of it, we wouldn't expect any different behavior, although, proper tests will be carried by the time we publish the resource estimate.
Sure. So, and I know it's early days, but just from what I've seen so far, it looks like this could be a pretty big discovery. Is it too early to tell whether or not it's going to be as big as Sunbird?
By the looks of it, could be bigger than our largest resource reserve today, which is the Antenna deposit. Antenna is, in terms of reserves, the largest, and then Sunbird, where we continue working, could be the second largest. This is of that magnitude at the very least, I would estimate, by the strike length, right? But again, give me a bit more time, and in a few months, I'll be able to give you a number in paper we can discuss.
Understood. I mean, it looks like a phenomenal discovery. Do you think that there's the possibility that there's more blind discoveries to be made on Séguéla?
Absolutely, absolutely. We are just focusing now on giving property-wide coverage to the Auger program, and yeah, I have high expectations that more of these type of blind deposits can emerge. But outside blind deposits, we have multiple identified artisanal workings and gold in soil anomalies that we already have identified, where we have not done any drill testing yet. We have over 30 of those gold showings on surface within our property, where we still have to put a drill rig. So, to come up with a blind discovery, having that kind of inventory just adds to our excitement and confirmation of the potential, I believe, right?
And just one last thing, maybe just an observation. I mean, when you acquired Rox Gold, you knew Séguéla was special, but I have to believe it's exceeding your expectations at this point.
Is meeting and exceeding expectations? Yes, yes. As I said, we really been, our original focus back years ago when we did the acquisition, a very controversial acquisition and focused. I was hearing some comment out of the Beaver Creek mining conference that's taking place now with one of these popular mining entrepreneurs saying it's time to be consolidating and making acquisitions now. Well, we were doing it 3 years ago. No, we were preparing for this, let's say, right? So, no, it was controversial back then. But since then, we brought the Séguéla mine into production, and our focus on those initial 18 months, 24 months, was to do a successful integration of the West African business and build a mine, right? So exploration, yes, we were continuing with the exploration, but certainly the focus was on the build, which was successful, delivered on time, on budget. And it is just now that our bigger focus is turning towards the exploration. And remember, this will be your lowest cost ounces. And so we have growth in the pipeline at the mine where we produce gold at a cash cost of around $600 per ounce at an all-in sustaining cost that moves around $1,000 and $1,100 per ounce. Yeah.
All right. And Dave, we'll come back to you in just a moment. Although, Jorge, before we move on to what's going on and the results you had at Sunbird, based on what you just said, I thought this would be a good time. Obviously, there's a lot of different prospects at different stages, but whether people are new or would be helpful for them to just hear it again, a recap. Could you just give an idea of which ones are already in production, which ones are close to production, and any sort of priority on some of the exploration at Séguéla?
Yes. Today, the anchor of our production schedule is the Antenna deposit, right? Which is the closest to the processing plant, as you see there. We're also mining at Sunbird. Sorry, at Ancien. We're also mining at Ancien.
You almost got Dave really excited there.
No.
I was like, what?
We're not mining at Sunbird yet. So we're mining at Antenna, we're mining at Ancien, and we're doing stripping and preparing to start mining at Kula as well.
Okay, and in terms of the exploration side, just if you could recap some of the preferred targets, if we call them for now.
Yes, as you see, the dots in red are or have been our priority. A lot of these dots in red, are areas that had artisanal workings on surface. So that's where we went first. It was just natural to do that. And we've been publishing results of our drilling work at Badior in the north, Gabbro North as well, Badior, Gabbro North. We have been drilling at Kestrel, which looks like an extension of Antenna. And now the discovery at Kingfisher. So, all of those dots and names in gray that you see there, like Winnie, Boaty, P1, and a lot of those nameless dots that you see peppering the map are gold showings where we have not been able to do any systematic work yet. It's a big property, and we're advancing systematically. And believe me, we're going to get to those. We're accelerating our budgets on the exploration side so we can give more coverage to the program. We have access to all of those areas. We don't have access issues. We've just been doing, methodically advancing and giving coverage to the systematic sampling of the entire property with auger drilling. For your audience, in this part of the world, because of the weathering profile of the rock, you cannot take a soil sample. It's meaningless. So you have to drill with an auger to a depth that allows you to get close to what is the soil several meters below, and then take the sample. So it's a short drill hole to sample soil. And that is the preferred way to do it. But it takes time, you know, you have to move with the auger, you know, and you do auger lines every what, you know, 200, 250 meters, 300 meters, and then sample every 50 meters, 100 meters on the line. So it's systematic work that we're doing covering the entire property. And it is the outcome of that work, as I explained before. Kingfisher is the outcome of that work, right? The first outcome of that work.
Well, appreciate that and hope that is helpful and certainly a good problem to have when you have too many targets. So
Yes.
Can I just sneak in a quick question here?
Sure.
So you're operating the mill at what, about 150%?
No. The design capacity, if we think of it in terms of dry tons per hour, the nominal nameplate capacity is 154. That's what we built. And as you well know, we have been able to capture all the opportunities in the design and have been able to run the mill at much higher throughput. Today, although we have had peaks, we're running the mill steady at 40% above nameplate capacity. 40%.
Yeah.
That's
So-
about 210, 215 dry metric tons per hour, which is an excellent outcome.
Right. And I don't think anyone expected that. But at some point you're going to reach a limit of what you can process at the existing mill. At what do you need to see in order to make the decision to expand the actual nameplate capacity of the mill?
Yes. You know, we've been making significant gains. Remember, the mine started operating just a year ago or a little over a year ago. So we have been making significant leaps and gains in terms of throughput, testing the boundaries, the limits, and I think today I can say that, you know, 210, 220, no, looks like probably we're getting to the limit of the infrastructure, right? So we have done an expansion, which we had in the feasibility study budgeted at $40 million with no money, thanks to the fact that the team has done an excellent work capturing all of those opportunities in the design. To go beyond this now is something that we still need to assess. And there are two factors that come into play for that assessment, Dave. One is we need to see the resource, right? We know the resource is growing and we're excited about it, but as I'm telling you, I haven't seen numbers from Sunbird for Kingfisher yet. So we need to make a match between the resource reserve, and then define what is that next leap in terms of throughput. To expand the mill beyond, 1.7 million tons of gold per year, which is probably what we can do today. It's not a complex issue because we already have the real estate in the plant and basically the blueprints for that expansion. We can add a ball mill and to work together with our SAG mill, and then, you know, we'll likely have to make changes to our pumps and changes to our thickeners and tanks but everything, things that are easy to accommodate. But we need a bit more time to see it's still dynamic, you know, it's a match between the size of your resource and defining then the magnitude of the expansion. But it's certainly a bigger mine today than what we envisioned back in the feasibility study, back in the build, back when we started producing. You know, in the second quarter, we were not able to see the full impact of this expansion just because we lost 19 days in aggregate, you know, 19 days of production in the second quarter due to the power outages, which is history now. But in spite of having that, we met basically guidance. You know, we were tracking to beat guidance by far at this one mine. But, you know, there was this freak accident with the power station, two power stations in the country coming out of service for unrelated reasons at the same time. That was a freak accident. And that impacted our production for 19 days in the quarter. But we didn't feel it because when we were operating, we were just pushing the process and hiking the grade, no?
Right.
So I believe the third quarter in terms of throughput ounces is going to be very good because we have stable power back again, and yeah.
Certainly exciting to think about with the gold price in the third quarter, although we will leave that
Absolutely.
aside for now. And I do have, before we move on, I do have one more question from our dear friend and Fortuna shareholder, Peter Spina, which, Jorge, you've touched on a little bit, so no need to repeat that. But if you have any additional comments, he was asking about the Kingfisher discovery. It's unusual since the rock type was different than the other areas around there. So should this be exciting as it opens up the potential for maybe another type of Kingfisher-like deposit or discovery potential?
Yes, I mean, it's in first, the host is a shear zone that is new to us. And then we have these felsic intrusives. I don't want to get into the details of the geology here, but we have a felsic intrusive coming within the shear and then hosting the mineralization within the shear. That is not completely new to the property. We've seen that those felsic intrusives playing a role before, but never in this magnitude, never. And it's a good host. The felsic intrusive behaves not plastically, but it's friable. It's glassy because of the amount of silica, and when it breaks, it creates that nice secondary permeability, no? Because of the fracturing, the way it fractures, and it just soaks the mineralizing solutions as they flow through the shear and find the open spaces within the felsic intrusive. So it is exciting. It's a bit different than what we've seen anywhere else in the property, and yeah, we're excited about this on many fronts.
Well, that's great to hear, and certainly good things happening. And in addition to that, also, as you mentioned earlier, did have drill results at Sunbird as well, where you have the results from a 5-hole, 2,000-meter program, which is part of a 12,000-meter program designed to infill and extend the current mineralized footprint. And what would you like to share about the highlights from the drilling there, Jorge?
Well, we're building an underground mining case here at Sunbird, right? A strong case for underground mining. And just for the benefit of your audience, all of our scheduled production today is open pit. And Sunbird certainly has the potential to be our first case for underground mining. And that's what we're drilling for, and we're drilling with a lot of success, extending mineralization deeper with good grades. And yeah, and just like with Kingfisher here, we need a bit more time so we can do our work and finish up with the underground mining mine planning, which is well advanced. No, is well advanced. So this drilling hopefully will contribute ounces that add to the underground mining scenario, underground mining case. Yeah.
And any updated thoughts? I know we've talked about this before there earlier this year, but in terms of a timeline of events at Sunbird?
We will be publishing our updated reserve estimate in February, March, like we do every year. It's our consolidated annual update. And there for sure you will see an aggregation of all the drilling and everything that we've been doing, right? And our plan is that we can report underground reserves for Sunbird at that point in time.
Okay, and would that include Badior or Kingfisher as well?
Absolutely. Badior and Kingfisher, we will report independently. As soon as we're done with the drilling towards the end of the year, we intend, as I said before, to publish a standalone resource estimate. But then all the others will come and be reported in our aggregate report of consolidated resources and reserves, probably by the end of February, early March.
Okay. Dave, did you have any questions about Sunbird in particular?
It's the gift that keeps on giving, isn't it?
Yeah, it is.
Does it look like as you drill deeper, the grades are getting higher?
You know, I wouldn't, we have identified a high-grade ore shoot that continues to extend, no? So I cannot say that we're seeing higher grades at depth, but we're seeing the continuation of the high-grade ore shoot at depth. And you know, grades in the range of 8 grams per ton, or, you know, good width for underground mining, you know, 2, 3, 4, 5, 6 meters. So it's looking good, looking good.
Okay, and let us also turn it over then to the results we had at Diamba Sud, obviously part of the Chester Resources deal from last year, and amazing. I guess that was around this time last year. I think we passed the 1-year anniversary on that. And certainly you've made some progress here. 95 drill hole program just completed, 13,300 meters. Comment from Paul Whedon, who again is the Vice President of Exploration, mentions the exploration focus at Diamba Sud has been testing, expanding some of the previously light drilled anomalies with a results including 6.9 grams per ton over true width of 33.3 meters and also 8.9 grams per ton over an estimated true width of 27.7 meters. And Jorge, what can you add to the results and would you like to share here?
Let me do a bit of arm waving here, because, you know, this property, acquired last year, as you well said, sits at the heart of one of the most productive gold belts in West Africa. It sits on the Sénégalese-Mali shear zone, only, you know, 7 kilometers away from where we are drilling here. We have the Loulo-Gounkoto complex owned by Barrick, 500,000 ounces of gold of annual production. And if you move a bit further south, you'll find the Fekola mine, hosted in the same geology and the same structures, no? The Fekola mine being also, you know, 300,000-400,000 ounces of annual gold production on the portfolio of B2 Gold. So we have our property here sitting at the core of one of these most productive gold belts, hosted in the same geology, similar rocks, similar structures. And yes, we are working to define mineralization in areas that were already known and existed, where the previous owner reported 850,000 ounces of gold, which we are still treating as a historic resource. So our work is focused on increasing our geologic knowledge so we can call those 850,000 ounces our own. And we will do that when we have a consistent, coherent geologic model. That's what we're doing. We do our own infill drilling. You know, that work is advancing well. As an outcome of that, we're infilling and expanding mineralization as well. For example, that new deposit called Western Splay. We have also Mogundi, Southern Arc. Those are new things we're drilling. But we will get the ball out of the park here when we start testing the bigger property, because our geologic understanding is supporting the concept that the entire package is supportive of a larger deposits. We need to drill some, and we shouldn't be shy about some geochemically muted areas on surface as well. And we have to place some deep stratigraphic holes and see what's there, because we don't know. Remember, Cesar took this property from a gold soil anomaly to 850,000 ounces of gold with very little money in 2 years. And then work stopped. They had no money. And that's when we came in. So with the work we're doing, we're enhancing our geologic knowledge, or geologic understanding of the deposit, which is key. And with that, we can, go and take this to the next level. Yes, we're finding, having some exciting drilling, identifying mineralization within some of these previously recognized targets, which had not received drilling. For example, Western Splay is a new thing. But I want to test the bigger property for more ounces. And I think we have good support today with our understanding that we have a fighting chance to come up with more deposits than what we currently understand, right? We just need a bit more time for that as well. But, we're doing the work, we're doing systematically, and I'm very excited about this opportunity, well beyond what we're working on right now, which is in and around the 1 million ounce mark, probably, right?
Yeah, and that brings up something I did want to ask about that you had here. You touched on that a little bit, but mentions the detailed review of the overall geological model to further advance the understanding of the mineralization controls was completed. So anything else that perhaps stood out that changes or gives you a better idea as you're going forward?
Yeah, that work is what's supporting our enthusiasm, that because we have large areas on surface with certain type of recognized geology that are muted geochemically, no, you sample and you don't get any gold, should not deter us from drilling, because we're not in the right, let's call it stratigraphic horizons, in that volcanic stratigraphy, right? We have to go beyond, deeper, so we have to drill some stratigraphic holes that we intend to drill this year to confirm the model, right? So, mining is a very exciting business just precisely because of these type of things, right? Precisely because of these type of things. When with geologic understanding, proper geologic modeling, bringing the right experience to the site, you can come up with a concept and go test it and see how it works. And we're excited about what we're seeing in this phase of reinterpretation. And that is just completely outside of the drilling we're doing and the results you're seeing today, Caracara, Western Splay, Area A, Area D. All of that work is going well, and I'm sure we're going to prove, ounces there. But then there is a bigger story for this property, and we're trying to capture that value, right?
Okay, and similar to the other prospects we talked about, we did get a question. Someone was, suppose, asking about the timeline, in particular about a construction decision. And obviously, I know that's not set just yet, but also perhaps you could touch on conditions that would be required to make the decision.
Well, first, just like at Kingfisher here, we intend to produce a resource estimation by year end. And that will be a standalone release. Once we have that, we'll release it, right? Second, we will be updating that resource estimate will inform a PEA, a preliminary economic assessment we're working on right now, no? And with that, we will assess the project and see if the ounces we have in inventory support a construction decision, or we need to go back and drill more, but there are stage gates here, right? So it's been a year of work. You know, by November, December, we'll have only a year of work on the property. We will publish a resource. We will assess the resource along with the engineering we have in place. And with that, we'll start making decisions. If everything goes well and we see robust returns for the project and whatnot, be sure that we are in a position to fast track this to production. Concurrent with exploration, we're doing a lot of environmental work on biodiversity, on you know, weather patterns, we're doing all of that work concurrently. So we don't say, okay, we have a discovery that supports a construction decision. Okay, let's wait now 2 years because that's what it takes to build the environmental impact assessment and impact study. No, we're doing all of that work concurrently with exploration. No?
Okay, certainly a lot of exciting things happening. Dave, did you have any questions on Diamba?
Just a couple quick ones. So first, I mean, if you look at the way that the prospects and the historic resource is, the way they're dispersed north south on the property, does this thing have the potential to be Séguéla Part 2?
What you see is a bit of an arcuate shape on the distribution of the deposits. That's quite clear, no? That is because of how the different lithologies surface, outcrop. And that's what is leading the team and our current thinking to that as we go further to the northwest, those lithologies and those structures plunge, go deep. So we're not seeing them on surface, right? So that is what's caught our eye and our interest and our excitement to go drill test those geochemically muted areas to the northwest, right? There's like a dome shape, and the surface profile, it's at a point where that dome shape intersects surface, and that's where the deposits are. So we want to go down plunge there on the, let's say, think of it as a dome on the flank of the dome, and drill test it, right? So, you know, those are ideas, are sound ideas, have good geologic support. Our understanding still evolving, and we need to drill test to confirm the thesis, right? But that's what's exciting about this business, right?
So, and then just real quickly, what's the permitting process like in Senegal, you know, say compared to Côte d'Ivoire?
We are already engaged with the authorities on the permitting process, and you know, they are supportive of developing their mining industry. So, you know, we don't expect any situations there. Of course, they want to see more local content, you know, local employment and things that, of course, are fair and we subscribe completely to, no?
Okay, Dave, anything else there?
No, I'm good.
So a few final last ones before we wrap up. Two here from Peter. He asks if the gold price continues to jump, will the company be even more aggressive with exploration work next year?
Yes, this year, 2024, we had our largest exploration budget on record. We are spending a little less than 5% of sales in exploration this year. It's around $50 million. And I envision even a similar size budget, or perhaps even bigger, next this week our exploration team has their budgeting session, and they're working there, and I'm anxious to see what they come up with. But yeah, no, exploration here, as you see, we have a lot of high value opportunities in the portfolio we need to pursue. You know, we done our share of M&A in at the right time in the cycle, looking back. You know, you never know. I cannot say that we were smart enough to make the acquisitions, but you know, looking back, it played well. We made our acquisitions when it was a bit unpopular, you know, and we were brave enough to take the long-term view and make the acquisitions. And today we're harvesting, and we want to continue harvesting. So we're always paying attention to opportunities. But I have to say that we are very excited about the growth that we have in the pipeline. We just need a bit more time, a bit more drilling. But you know, consolidator production around 500,000 ounces is our target, is our objective, with the long life of reserves and a diversified portfolio. So we're not just pursuing growth for growth. That's what you will see emerge in this market. I've seen it over and over. When prices start running, then you see these old faces reappear, saying, okay, it's time to grow, and I will consolidate, and I'll make the industry consolidator, and it's the time for M&A, and you know, everybody has their own views. We certainly will be aggressive on M&A if we see the right opportunity, but it's not driven by the fact that gold is going higher, no? Because that's playing the market, and we don't know what the market will do. We take the long-term view. We're harvesting, and if we see things we like, we will be active there. But as you've seen, as we just discussed, a lot of excitement on our own properties right now, right?
Yeah, and like you mentioned, we have started to see some signs of a little bit of M&A, in particular in the past couple of weeks. And in terms of the exploration, that was, Dave, you can let me know if you agree, but that was one of the things that was really helpful for me last year when we actually got to be on the property, and certainly just seeing how the guys on the exploration team were viewing it, and then having another year of success on top of that, plus what you've found, and I'm sure a higher gold price gets people a little extra excited to go out
Yeah,
and continue doing it.
but a question for you guys as investors and market participants. You know, again, consolidating doesn't add ounces. Consolidating does precisely what the name does, consolidates ounces in less hands. So I was listening to someone say this morning that the space of gold producers is just too dispersed, and we need more consolidation. I was like, too dispersed? I mean, what there are 20 companies, probably 30 companies at best, with some meaningful production out there. Then you have a lot of, you know, you might have some small production here and there, but you know, what our largest or second largest producer, what is Barrick, Agnico, but what's the production? 4 million ounces a year? That's nothing, right? Fortuna is producing 500,000 ounces a year. How many gold producing companies bigger than Fortuna are there today in publicly traded markets? I don't know, 20, right? Is that a lot for a commodities industry? Or you want to consolidate the entire gold production in 5? That will create a problem, right? You know, as a banker once told me, there is this discussion, no, that gives for good debate if we should adopt the gold standard, and a banker was saying, do you think the world will give its currency to a bunch of mining guys, to 5 mining guys? You know, do you think the currencies, the central bankers will give the control of their currency through the gold standard to, 5 Hicks. You know?
Well, I trust you over Powell, Jorge. So
Yeah, yeah. But M&A has to stand on its own legs, case by case. But making this argument that there are just too many producers out there is just, I believe, a bit self-serving for someone who wants to charge M&A advisories, taking advantage of the moment. But I just don't see an industry that's just too fragmented or something. To the contrary. Newcrest doesn't exist anymore. Now Centamin doesn't exist anymore. Randgold doesn't exist anymore. So what is it that we expect? All of those plus million ounce producers there's just a handful of those, right? 2 handful of those, and that's it.
yeah, and Jorge, perhaps in the future, it'd be great to dig in further in that discussion, especially on the silver side as well, where you have some similar dynamics. We will leave that aside for today, though, since we're running up on an hour. Although, Jorge, 2 last quick ones that as much time as you need, although I think they'll be quick. Peter also asked, he's excited about a dividend, and if there's anything, thought process or anything that you would care to share on that for anyone else who might have that question.
Yeah, return to shareholders is top of mind, and for example, we have our share buyback program in place now. As prices start rising and rising, when we look at a share buyback, we think of, okay, what is our internal view on NAV, and should I deploy the capital towards the buyback, or and at what discount, no? Because I can also use that capital for growth. The industry has been shy on the dividend as a whole. There are just token dividends out there. For me, the dividend has to be sustainable, meaningful, predictable. And yeah, with prices like this, absolutely, the dividend starts to make more sense versus probably a share buyback, right? Yeah.
Okay, and the final one that I had for you here, oh yes, was just San Jose. I know in the press release, I believe from the earnings call, you'd mentioned, and we talked about that, it was in the third quarter where it seemed to be where a decision starts having to be made. If there is anything that you can comment on there, I know you have not made a decision yet, but if there's anything to add to that.
We are working on the optimization and all the studies that have to take place. And we're still working with the timeline of end of this quarter, very start of the next, to give guidance to the market on what's going to happen with San Jose, right? And on one side, I think we have good communication with the analysts community, with the bank analysts community, and they all are assigning very little value or zero value to San Jose today, right? San Jose is not contributing in any meaningful way at all to our NAV. We still believe have some optionality there on the exploration side. Yessi, there is a case for continued mining with Yessi, that it's what we're working on as we speak. But a clear option here is that we trigger a progressive mine closure, and yeah, that is certainly a big possibility for this mine.
All right. Well, I appreciate that, as well as everything else we've shared here today. I think we covered just about everything, and I might add that certainly as news is released, one of the best ways to find out about that is at fortunamining.com, where you can opt in to get their updates so that when there is news, you'll hear about it first. And of course, one other thing, I'd like to thank Dave Kranzler for being here. And you can find Dave at Investment Research Dynamics, including his Mining Stock Journal, where he gives a thorough, in-depth analysis of any of the news events that come out with Fortuna and a handful of other companies. So Gentlemen, thank you both for being here. It's exciting news. So I hope you're happy about that, Jorge. It seems like you are. And Dave, thank you for joining us. And we'll look forward to catching up and doing this again soon.
Thank you guys for the opportunity to speak to your audience. Thank you, Dave.
Thank you. And congrats on the drill results.
Thank you.